Morning, Paul Georgie from Allendale. It's January 28th, Monday morning, and first of all, we had a great conference over the weekend. Those that attended went away with a lot of information and some strategies that they can use. If you couldn't make it, give us a call. Give your Allendale representative a call, and we'll be happy to share some of this information with you and give you some ideas. So you can reach us at 800-262-7538. Some of the things that are affecting the market this morning is still the weather in South America. Brazil did receive some rain over the weekend. Argentina outlook is still tenuous as far as the crop conditions go. We see temperatures reaching 100 degrees here early this week in Argentina. And then there is some advertised rain for the weekend with amounts of quarter to 3/4 of an inch and as large as an inch and a half in some areas. The only problem is they've moved that back about 2 days. They were looking for it here on Wednesday. Now it's expected to arrive Friday, Saturday. So that's given the market a little bit of support here this morning. We've got also the CFTC Commitment of Traders report that was out Friday afternoon. Showed that the funds increased long positions in corn and soybeans and increased their short positions in wheat. So we may have noticed and remember that we talked about spreading going on in the soybeans wheat complex. It certainly indicates that that was the case with the funds building larger short positions in wheat here last week. There was a story out on Reuters this morning that a Chinese official did make a comment that they feel like there is their goal of being self-sufficient in food production is not possible. And because of the increasing demand, because of movement of people from the country to the suburban areas, creating a demand for food, and that's limiting their chances of being self-sufficient, and that's providing a little bit of upward bias here this morning. However, we still got the problem with export demand. We've got the problem with ethanol demand. There's been on Friday, Poet announced that they are closing the Macon, Missouri plant, and that will be shut down simply because they can't get corn to feed the necessary production there. And that is a concern. And then we had the cattle on feed report on Friday, which is also suggesting that high corn prices and availability of feed is certainly causing cattle producers to move cattle and not put as many in the feedlots. We had cattle on feed numbers at 94% of a year ago. The trade was expecting 95.5 as the total on feed. Placement number was a surprise as well. Trade was looking for about 104. It came out at 99. And marketings were well above what the trade estimate was. They were looking for around 93%. We came out at 98%. So the profitability of raising cattle and feeding cattle has certainly influenced the number of cattle that were placed, which shows another decrease in demand for corn. So we've got that battle to face us and look forward to here in the next several months, even as we go into the end of the marketing year. Cutout values were lower in beef on Friday, down 57 cents for choice, down 33 for select. We expect that the cattle on feed numbers this morning are going to give us a boost here on prices at the Mercantile Exchange. In all categories, it's got to be considered friendly. The market was oversold going into this report, so wouldn't be surprised to see a sharp rally here today in fed cattle futures. Feeder cattle should see some strength as well. In the pork complex, the cutout values there on Friday were up 41 cents. The concern that we've got there with if we do see a lot of strength in cattle, we may see some some weakness in hogs, some spreading activity going on there, as we've seen the opposite of that happening as this cattle market has fallen apart here over the last a couple weeks. So a lot of reasons to stay in touch with Allendale. Give us a call at 800-262-7538. We wish everybody a very successful trading day, and I will talk to you tomorrow morning.